What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 1st of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to beg a big question. How bad can it truly get for Bitcoin and cryptocurrencies? For those of you who religiously watch the channel, you know I've been generally sharing a bullish narrative. I can't lie, based off the information I've seen in the market, I'm generally bullish at this point for Bitcoin's price. But I want to go ahead and play devil's advocate. I want to talk about what it might look like if we are to continue correcting and try to understand in the most conservative fashion possible how bad can it truly get for Bitcoin and the leading cryptocurrencies. So in today's video, I hope to do that. We're going to be diving into the conversation. Let's go ahead and kick things off. Now, in order to start off in this conversation, we will be covering the broader range of the crypto market. But first, I want to take a look at an interesting perspective, one in which we haven't really talked about here on the channel. Instead of looking at the standard Bitcoin chart or looking at the ETH to BTC ratio to see if Ethereum is outpacing Bitcoin, right? We've already covered that a lot here on the channel. What I want to focus on here today is the aggregate market cap of the two leading cryptos, and that is Bitcoin and Ethereum. And right now we can see here that we're right around the range of $1 trillion in value for both cryptocurrencies when it comes to their market caps being combined. And again, one big point I want to emphasize here is that we've generally been in this range since back in February of 2021 for more than a year now. And all the while we've had periods where we've been above it and below it. This is a major psychological level for cryptocurrencies, especially these two combined assets that are generally referenced as the leading cryptos in their respected industries, and not to mention as well, seen as these kind of digital store of values with really prominent market, in this case, monetary policies that make them beneficial to hold long term, right? Generally finite in supply or reducing in supply over time. Now, putting that aside here, I want to go ahead and share my technical analysis here, albeit take it with a grain of salt, just like anyone's perspective. It's just a general estimate to understand how price could react based off of what we've seen here over the past few years. Now, might look a little bit overwhelming. Give me a moment here to detail a little bit more as to what this really means and what we're projecting for here. Now, I'm going to go ahead and get one thing out of the gate here. Very, very clear. I think anyone out there telling you guys $10,000, $20,000. Some of you might even believe in this. I don't mean to be insulting by any regard. I respect all of you for your own opinions, but I gotta be honest with you all. If I'm giving my candid take, which I'll always give here on the channel, I think it's completely out of the question. We have never seen Bitcoin not only ever come down to a previous all-time high here. So if we were to come back down here towards a total aggregate market cap of 400 billion for the two leading cryptos, we've never seen that happen in history. But on top of that as well, we definitely have not seen it enter in towards mid-range territory from a previous bull market. It just hasn't happened before, right? Only during bear markets here, not after we've set in new all-time highs. It just hasn't happened before in the past, and I don't think it's going to be happening anytime soon. But there is a potential range here where we could see price decline a bit further. And the general market cap range here I'm going to give you, and I'll give the respective price range as well, so you guys can keep that in mind when you're looking at the charts, is around $850 billion in aggregate market cap. Roughly speaking, a little over a 15% correction from where we are now for Bitcoin and Ethereum, give or take. So if you were to put that in kind of price perspective, again, depending on the time you're watching this video and where market price is, you're talking about the kind of low $30,000 range for Bitcoin. And for Ethereum, you're probably talking about the kind of mid upper $2,000 range, okay? So just want to make that clear for price perspective. That's what we're going to be claiming here in today's video. Now, again, this is the kind of worst case scenario, but it's one that is completely doable and something we should be cautious of, right? And I'll go ahead and talk about why. Because as we take a look throughout this cycle is defined by clear, repeated patterns in price. And if you're looking at the hourly chart of the daily, you're just not going to see it. If you're looking at the long-term perspective and you can learn from it, you will start to see that the market this time around is very different from previous cycles. It has been defined by two-step processes. Actually, I would say three effectively. First off, you have the rebound from peak capitulation, a significant rally in Bitcoin's price in the sum of a little over 25 to potentially 30 weeks of price action from bottom to top. And this is important to note here. For example, the first rally we had back here in December 2018 at the bottom depths of the bear market here towards June of 2019 was a cycle of a rally in this case in the overall bull market that was the second fastest recovery in all of Bitcoin's history from the capitulative lows of a bear market. And technically speaking, we should be seeing lower gains over time, but we overshot ourselves, and that's due to credit and leverage in the market. You guys know I've beaten that point like a dead horse, but it builds into why the cycle's acting like it is. Now, that's also followed by a return to norm, a pullback, if you will, to reality for price action. And we can see here that not only did we overshoot ourselves here, right, in regards to Bitcoin and Ethereum's market cap, we went all the way up to around $300 billion market cap, almost getting back up here, really speaking, towards the December highs, just $100 billion off. But we had two significant corrections here within a short period of time. I'm going to go ahead and zoom in so you guys can see that very clearly here. Now, the reason why I don't want to consider the wick here in this case is we had a really big cascade of liquidation events. Roughly speaking here, as we can see between these two daily candles, we roughly had about a 51% correction in price. This, again, I think is something we need to discount a little bit because this was a black swan event. This was when all global markets were selling. We had one of the fastest pullbacks in the Dow Jones, S&P 500. You guys remember what happened back in March 2020. I don't want to talk about it too much, but you guys get exactly what I mean by this, right? We overall saw a 50% plus correction, two 50% plus corrections. One in a very short period of time, a flash crash, a liquidation event over the period of just a couple of weeks, mainly coming in within a matter of days, and an extended one over 25 weeks with a price action. Now, coming back out here to our long-term chart, we have step 3. After these corrections, we come back, we return back to the previous highs. We've had more time for price to make that recovery, come back up, and set up for the next move higher. And that's another 20-something week breakout higher, 26 weeks from that range here. Very similar to the time range we saw here, right? Basically taking up about half a year here where we really start to see Bitcoin stealing the stage, as well as Ethereum really starting to gain market capitalization and see significant increases in the ETH to BTC ratio. All signs of optimism in the market. Now, as we take a look here at the chart, we're going to see a little bit of repetition. Not only do we see that breakout in price, again, important thing to note here, a couple hundred percentage points in return, very similar kind of return estimates here. But on top of that, we're seeing a repetition of past price action. Within a matter of 6 weeks, Bitcoin collapses 54.3% in price. And if you really want to simplify it or view it another way, really in a matter of just 2 weeks here, we see Bitcoin's price collapse 52%. It's negligible, but you guys generally see here what we're focusing on. The similarities here with the correction we saw back in February going into March of 2020. Very short period of time, significant pullback in price. And along with that as well, albeit it's in a different order, we've had a long drawn out correction here. And I think as the price point I'm going to give here, again, as we talked about earlier, this $850 billion range, roughly speaking, is about a 53.8% correction. Very similar to the correction we saw back here in July through December of 2019, as there was fears around China, a lot of other macro events that were spooking crypto markets at the time. But now you can see here what happened back in the past. Right? I think very clearly we could have that 55% correction. Yeah, we could go down to $850 billion in market cap for these two leading cryptocurrencies aggregated together. And yes, we could see Bitcoin go into the low $30,000 range. We could see ETH go to $250 or $270, whatever kind of price target you want to give, but generally in that range, right? I can accept that, and I can understand when that sentiment comes. But the important defining factor that people cannot ignore is that for the last year and nearly year and a half here, since late December, Bitcoin and Ethereum have successfully turned their previous resistance from the past bull market into new support. And that has not only been true here for the past year and a half. What's important to note, turning off our drawings here so we can see it a bit clearer, is that we have broken away from the support line. In fact, we are climbing above that support line. Albeit we could come down there and retest it, the market is signaling something very clearly. Now, the bulls are not worried at this range here. At least the institutions and larger players are not. And again, I can't emphasize enough how this cannot be ignored here. The significance of how Bitcoin and Ethereum have been performing, especially considering the macro environment, right? And again, I need not repeat too much here. You guys have seen me talk about the BTC ratio against the NASDAQ as well as the S&P 500. We have seen it continuing to make higher lows here and outperform traditional equity markets, supposedly more speculative asset doing better than equities. That's a really solid telltale sign that all the while we might have a little bit more correction to go. The worst is behind us. Now, one big thing I want to emphasize here is that it may not be the same picture for altcoins. To be honest with you all, the trend in altcoins is a little bit more uncertain here. Even on the logarithmic chart, we can see that altcoins have already pulled back about 50%, relatively similar to Bitcoin and Ethereum. But I have to be honest with you all, the future of altcoins is a little less certain for one big reason. And it has to do with the fact that institutional interest in these assets, which are really what's holding up Bitcoin and Ethereum, institutional investors, that is. Institutions aren't all that crazy about alternative cryptocurrencies outside of these two assets. When we're really talking about, if you were to survey the kind of sentiment that institutional investors have for the cryptocurrencies under the top two versus Bitcoin and Ethereum, which are the top two, you'd probably find a lot more eager to get into Bitcoin and Ethereum first before getting into altcoins. Altcoins are heavily retail driven. Now, I talk a lot about this concept here of the difference between these two markets here in the focus. And on top of that, dive a lot deeper into this conversation around kind of the worst case scenario here and why we are not getting bearish at this point, even if we consider the fact that we might correct a little bit more in this month's Dash report. Now, if you guys haven't checked it out already, the Dash Report is a newsletter we write here on the channel, and I go through and give a whole macro overview of the current crypto space, equities, commodities, and Forex. And boy, is it an exciting time for everywhere in the world of finance. It's a great way you guys can support the channel. If you love my ramblings here and you want to get that in writing fashion and maybe go a little bit deeper than what we do here on the channel, you can definitely check it out, and you can set it for an annual subscription, get 20% off. Links down below in the description. But if you guys are interested in this topic, we're going to be covering that in this month's newsletter. I want to go ahead though and dive further into the conversation here though. And I want to go ahead and use one of the favorite data science models that I use just for the pure simplicity that it offers here, because sometimes models can be so complex in nature and they can they almost in a sense can compromise the ability to simplify investing in order to come out on top against the market. And the 2-year MA multiplier here is a metric that just simply looks at the 2-year moving average, a very solid moving average metric that long-term investors look for value investing. And it multiplies it by 5 in order to understand where cycle tops or overbought periods of time in the market, not just bull market tops, may be. And I want to go ahead and just emphasize here what's really happening over time. Now you notice in the past year, we used to have exacerbations beyond the 5-year MA as well as below the 5-year MA, below the 2-year moving average, the standard one. You can see that we had, for example, price of $30 above the 5-year MA, which was turning around $8. We saw a similar pattern here of $214 above the 5-year MA at $63. We saw here around $1,184, almost $1,200 above the 5-year MA, which was $329.61 at the time. And even back here, we saw in December 2017, nearly $19,000, where the MA was less than half of that, but right around half at around $9,917. But I want to bring your attention here to what's happened this time around here. We came right up against the line here for the 5-year MA, and we did not exacerbate above that level. We didn't see price rally beyond that. Why might this be? Well, I think one thing that's important to keep in mind is that as time progresses, we are seeing decaying returns in markets. We're not seeing the great euphoric, parabolic, smooth rallies we saw in the past. What we're seeing here is exacerbated short-term rallies and exacerbated short-term corrections. Periods of consolidation waiting to make the next leg up. And I think it's important to note from this point on that if we take a look at the 2-year MA, right, we can see $34,791 is that level. And if anything that we've seen from the past year, at least in this cycle, has showcased, that when we have these corrections, we do not live below this range very long. And again, removing the exacerbated pullback from COVID, right, especially the very low wick on the candle, right, where we had a solid set of liquidations in the market, an unforeseen macro event, we really didn't live below this range very long. And I think at the present we're living in and in the coming weeks, even if we get this correction, it'll be the same case scenario. So what's my point in all of this here today? My point here is that all the while the market is not exciting, all the while price is not signaling an absolute breakout in this case, at least here today, we need to be looking forward. We can't get caught 2 steps behind. We need to learn how this cycle differs from previous ones, how it's been acting over the past few years, not over the last few days or the last few weeks. And when we take that zoom back here in this case, we take a broader look here, we see that all the while we don't know exactly what Bitcoin's going to do in the coming days or weeks. We're pretty confident to a very, very large degree, at least for the last 1.5 years, that the support level Bitcoin is holding right now, as well as Ethereum, is setting up the stage for another move higher into the near future. And if we can just remain patient, if we can mitigate our emotions against the short-term volatility of the market, like we've seen in the past, Bitcoin and Ethereum have been through this before, we may just be able to reap the benefits of it. But I'm just one person. You guys can take my opinion for what it is, take it with a grain of salt, and you should always not only do your own research, but take opinions from everyone else. I don't mean to be a monolith opinion that you guys should rely on. I just hope more than anything that it can provide value in your investing thesis and help you in making the right decision. So that being said, everyone, thank you all so much for watching. If you like this video, consider dropping a like. And on top of that as well, one important thing to bring up here as well is that if you're a hodler like myself, if you're focused on the broader trend in the market, you can also check today's sponsor, and that is Celsius. Celsius is a cryptocurrency platform that allows you to put your assets in the crypto space to work. With over 1.7 million people utilizing the platform, there are millions of people across the globe who are earning yields on their cryptocurrency assets. From non-US users to accredited US investors, all eligible members are able to receive yield on various cryptocurrency assets, from stablecoins to hard crypto assets like Bitcoin and Ethereum and your favorite altcoins. If you're interested in learning a little bit more about what Celsius has to offer, I definitely recommend checking out their website, as well as learning about all the other features outside of yield generation, from borrowing off of your crypto assets as collateral, as well as signing up for the credit card and buying as well as swaps within the app. I definitely think it's going to be valuable for you guys if you take a look into it. They're a long-time favorite of ours here on the channel, and have been following Alex and the team throughout their journey since as far back as 2018 when the project started. Celsius is a really phenomenal company. If you guys are interested, check them out down below in the description. It's a good home for your crypto. But that being said, everyone, thank you all so much for watching today's video. And again, one last close here. Remember, come back to this chart here when you need some guidance here in the market. And again, if you can come to terms with the worst potential outcome, realistically speaking, then it can help you to stomach that volatility and prepare for a bright future. Thanks so much, guys. I'll see you all in the next video.